Mm. Hi Toby, are you there?
Hi.
Hi, how you doing? You all right?
Hi, how's it going?
Hello, how's it going? How's your holiday?
It's nice and hot here. But I've taken some time off from the beach, so it should be fine.
Oh, I really appreciate you doing it while you're away. So is the how's the internet connection there? You seem a bit jumpy. We seem to have a few connection issues. Am I pausing at your end or?
No, it's fine. Just hang on 1 second. How's that?
Yeah, I mean I can look and I can see you and hear you fine. It's just that you keep pausing. But it might be that you're
I should,
adjusting things on the phone, maybe.
yeah, I've been adjusting these on the phone, so it should be all right now, I think.
Okay, yeah, you seem loud and clear and no lag, so that's good.
Brilliant.
So yeah, we're going live in about half an hour.
Okay.
I had a good chat with Andy and Julian on Monday. I mean, you guys are all super experienced and you know this inside out, so I think it would just be a fairly free flowing conversation. Were you kind of happy at those main bullet points?
Yeah, no, those make sense. Happy. That's all. It's all great.
Yeah, fantastic. Okay. Um, So what we normally do, I mean, you might want to wait for these guys to come on, but what we normally do is once everyone's tech's okay, you might remember from last time,
Yeah.
just go on mute and just lurk in the background, do whatever you need to do. Maybe you can squeeze a quick massage in or something. I don't know. And yeah, so we don't have to be sort of sat here for half an hour waiting, and then
Yeah.
I'll just shout out when we're about 5 minutes away and we can reconvene.
Brilliant.
And I will. I'm actually going to intro the panel. I think that's what we agreed with Andy. I'll just check when he get comes on. But yeah, anyway, it should all be fairly straightforward. Um, One thing I should mention while it's me and you on the call, bit frustrating and probably slightly foolish of me to try and get the mentoring planned within a week of the summit and also a publication that we put out, but we're struggling a bit on numbers. So,
Okay.
and I think it's such a great initiative, and I really do believe in the initiative. So I think, but I just want the first one to work. So I think we might have to push it for say a month, where to allow us to do a proper marketing campaign. I don't know what your availability is like towards sort of mid to late March, but we've got kind of like 10 people signed up at the moment, but really we're looking for 20
Yeah.
plus. And we've relied mainly on kind of social media and word of mouth at the moment. We haven't actually done a proper email marketing campaign.
Hmm.
So I think rather than just fudging the first one, I think let's just wait and make sure the first one's really good, and then it's
Yeah.
up.
That's absolutely fine for me. I'm very happy with that. No problem at all.
Brilliant. Um, okay, just bear with me a second. So you're there with the family, I assume, are you?
I am, yes. We're having a bit of winter sun.
Yeah, that sounds good. We've got something planned. Oh, feels like ages away, but it's not till the end of April. We're off to Greece.
Oh,
Um,
nice.
we've got a 4-year-old, so there was like a period of 3 or 4 years where we were just like, it's just not worth the risk of going on holiday in case
Yeah,
no one enjoys it. But then we had a great trip. We did our first ever all-inclusive resort, which we usually would, run a mile from, and it was brilliant last year. So we're like, okay, we found the blueprint that works with a 4-year-old.
yeah.
So yeah,
We've done the same. So I've got a 10-year-old and a 5-year-old. For the last few years, we've just been coming where we would never have got to all inclusives in Lanzarote. Seems to be the if you'd asked me that, I would have
yeah,
I would have laughed. But it works well. The kids can eat what they like. They can run around. They've got stuff to do. Everyone's kept busy, and it's all sort of it's all very easy, which makes
yeah.
makes a big difference to a holiday. I think when you
I
get
think
near kids, anyway.
as long as you choose a good, the right resort that fits you and your kind of taste and everything, then it's brilliant, isn't it? I was amazed we didn't even leave our resort in Greece last year, Crete, to the point where people asked me where we went, and I can't even remember what the town was called.
Yeah.
We just didn't even leave the resort, and it was kind of like this is actually, yeah, like I'm buying into the whole concept of a resort now. Um,
Yeah, I think the days of adventurous holidays have gone for a while. At least until my kids get older, then we might do some fun things. At the moment, it's
yeah,
like here's the pool, here's the beach. Now get on with it. And
yeah,
well,
yeah, exactly. We couldn't get Zach into the kids club, which was a bit of a shame. He had a bit of a freak out, but I think this year he might
yeah,
be
exactly.
different.
No, same with my kids. They don't like to go in there. Or like go, and they get sort of
Yeah,
like frog marched in there like it's prison. Like no, please don't let us in.
they know what's happening. They
They
know
know what's
they know they're
happening.
being yeah. I think Julian's here. Hi, Julian. How are you? How's it going, Julian? You all right? Can you hear?
Hi, Anthony. Yes, I can. Hi, Toby.
Hi, Julian. Good to see you.
How you doing? I hear you're in holiday in Lanzarote.
I am. I was just saying to Anthony that I've thrown out all my prejudices, and now I'm in an all-inclusive in Lanzarote with my kids, and life is good on that side of it.
Good.
Any questions, Julian? I think you've done this a few times with us now, haven't you? So
I have, yeah. I don't think so. I think I just was coming here to check the tech. Then I'm going
yeah,
to camera and go off screen and go back to my meeting if that's okay.
absolutely. If you're mid-meeting, I would suggest you get back there. Yeah, so definitely just mute off camera, and then if you could be back 5 minutes before we go live. So 5 to 3.
Perfect. All right.
Excellent. All right.
I'll
Thanks.
Brilliant.
see you
See
then.
you, see you around a bit.
Cheers.
Bye now.
Hi there.
Hi, Andy. How are you?
I am good. Thank you.
We've got the other guys are on. They're just lurking off camera at the moment. Julian has popped out from a meeting and has gone back to the meeting. Toby is on holiday, so goodness knows what he's doing. Yeah, so we're all here. We're all good. The tech seems to be working.
Good.
I can't remember, Andy, actually, if we said I'm introducing the panel or not, or is it just?
I'm happy to do that. I think, yeah, I mean, I was going to just start with, very warm welcome from me to this final session, looking into the role of insurance in accelerating and scaling the energy transition. My name's Andy Cox, blah, blah, blah. And then I'll make it clear that I'm not an insurance expert, but then say that I'm joined by two veterans in Julian, explain he's from Munich Re, where he's the chief underwriting officer for their direct insurance arm, Green Solutions. And then Toby Berman from AXA Climate, where he's head of London market and public-private partnerships.
Perfect. On the Munich Re, I would rephrase slightly. So Green Solutions sits within their direct. So it isn't the direct arm. It's within that. It's part of the direct insurance arm.
Okay.
But yeah, no. If you're comfortable to just do that, that's fine. So what we'll do is if you keep the Zoom chat box open. I will count you. Well, I'll just say live, but before that, we'll all reconvene 5 minutes before we go live, and just sit here for a couple of minutes, have some idle chat, and then 1 minute before, we need to basically just go quiet and sit there. I'll go off camera, and then when you just see live, pop into the chat. You're good to go.
Okay.
We've got a couple of polls running. You don't necessarily have to refer to them, but once we've got some decent responses, I'll pop the poll answers in. And then if you need an extra talking point, that could be something you could refer to. And also, any audience questions as well, I'll pop in there.
Okay.
And then when you're done, so I need probably a couple of minutes just to close the event. So I think what we'll do is I will give you a countdown to the point that I need to come on. So again, just keep your eye on the chat. I'll say 10 minutes to go, 5 minutes to go, 3, 2, 1. And then if you wrap up and hand over to me, then yeah, you guys can just shut down your cameras at that point. And if you feel like the conversation is reaching a natural conclusion a bit early, that's okay as well. Because as I said the other day, this is the last panel of the day. So if it ends 5 minutes early or whatever, not a big issue at all. We can just close the session. So no major pressure to be kind of bang on a specific endpoint.
Okay. And can you just go back over the poll situation again, what you said? Yeah.
So we're running a couple of very basic audience polls. So the audience are viewing this through an event platform called Swapcard. So what they see is a load of stuff like tabs with the agenda, live session. They've got the video there, and then in the bottom corner is a chat box. And in there, they can ask questions, and there's polls. Right. So we've just put a couple of very basic multiple choice polls in. One is around where people see the biggest opportunities within the energy transition for insurers. The other one is where do people feel the biggest inhibitors are? So things like, is it data, is it expertise, is it capacity, is it demand? So once we kind of get a sense of the answers, I'll just drop them in, and you can either use it or not. It's just another potential talking point.
Sounds good. Okay. Yeah, no, that's fine. I think that's fine. I might just switch seats because it's very bright behind me. So I wonder if this is it better like that?
Yeah, I think the light's a bit better. Yeah.
Also says I'm from Howden as well, which might be helpful.
No, that looks good. Yeah, I think that's probably a good move.
We have lots of backgrounds, but they're all on Teams. So
Right.
I'm not proficient enough to work out how to get them onto Zoom.
Well, as you say, we've snuck Howden into the background, so job done.
Exactly. Yeah.
All right. Well, if you're comfortable, feel free, to just sort of go on mute, turn the camera
Fine.
off, do what you need to do, and then if we could reconvene at 5 to 3.
Excellent. Okay.
If you guys aren't here, I'll just pop up and shout.
That's fine. Is Toby there?
Yeah, Toby's here.
He's doing something else. Okay, I'm just conscious I won't actually say hello to him until we formally start, but that's fine. No worries.
It's probably.
Oh, he's gone.
Oh, there he's gone. Yeah.
Never mind.
Slightly concerning. I mean, his internet connection actually seemed fine when we were chatting earlier.
Right.
Okay. Here he is. He's coming back. You can say hello to him now.
Is he back? Oh, yeah, there you are. You back, Toby?
Oh, I got disconnected, but yeah, I'm here to say hello.
How are you doing?
Good, thanks. Enjoying my holiday for the.
Yeah, I've got to be honest. It feels like beyond the call to me to do this. So I don't know what Anthony and the team are paying you, but hopefully lots.
Not much.
I can tell you, it's actually it's good because it means I get away from the wife and kids for a bit. So it's actually a holiday within a holiday on this side of it.
Do you know what? I was actually thinking that sometimes just to go back to the room, even if it's on a work call, is blessed relief.
Exactly.
Just as a general point, Toby, I haven't said this to Julian, but I mean, on how we'll do this, I guess, with the questions I'm going to throw out and so on. I mean, they're not going to be directed at. There might be one or possibly two that might be specifically directed at you or at Julian. But to be honest with you, these are questions which each of you should have a view on. So, don't wait to be asked to. Obviously, we just need to somehow manage the clunkiness of everyone trying to talk at the same time. And I will try and bring you in if you're not talking or whatever, and try and manage it. But I would encourage you to, just speak up.
Yeah, no problem. So it can sometimes be difficult on a Zoom call because you don't know on that lag and stuff. But I'll try my best. If it starts getting clunky, then yeah, feel free to sort of to direct it from that side of it.
Yeah, that's fine.
It might be a safer plan if Andy kind of takes control and just brings the other person in for any additional thoughts or whatever. Because I think both of you will probably have a follow-up comment on what the other one said anyway.
Yeah.
I'm assuming so.
Yeah.
That will avoid having, because I would guess if you're in Lanzarote in a hotel, there's probably like 1 second lag, which is can be enough to create some awkwardness. So maybe if Andy just takes responsibility of kind of like jumping between you, then if you're happy with that.
But Anthony, I can tell you the signal here is better than the AXA offices. So that's one good thing.
Very good.
We had a lot of AXA today. We had Martin Powell doing the keynote and we had Natalie Tong on the carbon markets one, and it's all gone without a glitch. So fingers crossed.
So maybe they've upgraded since I've been out. So maybe that's nice. But no, that's good. And they were well received.
Yeah. We've had really good numbers for the event. Really good engagement on the carbon panel polls and stuff. So yeah. And they both came across really well. So all in all, I'd say.
And now Julian and I have the graveyard slot, so it's time to put everyone to sleep. Is that?
Well, I think we might have saved, one of the key sessions to the end. At the end of the day, energy transition and scaling it up is arguably the opportunity, isn't it, in terms of revenue? So
yeah, no, I agree.
I would be surprised if we have people dropping off. I think, if anything, numbers might go up a little bit for this one. So, ending strongly is the way I see it.
Brilliant.
And Toby, I'm just going to say who you are, where you're from, and your title. But when you kind of start speaking, it might be, feel free to say a bit more about your background.
Yeah, no problem.
Worth doing, I think, just to get you warmed up as well when you get going.
Yeah, I can do that.
Cool. All right, I'm going to go on mute and do some work.
All right, see you guys in a bit.
See you in 10 minutes. Cheers.
Back again.
Yep.
Julian, are you there? I'm just going to send Julian a little text. We have about 2 minutes.
Otherwise, it'll just be you and me, Andy.
Sounds fine to me. I'll just make it up. Don't worry.
You can pretend to be Julian. That'll be the
Yeah.
I think if we had a wager on if it was just going to be 2, given you're dialing in from Lanzarote, it would have been Andy and Julian, not Andy and Toby. Okay, there's about a minute to go. I'm going to go off camera. I've messaged Julian. Just wait for live to go into the box, Andy, and then you can go. Okay.
Okay, and we'll just have to hope that Julian gets his arse in gear and joins. Yeah.
Yeah.
There he is.
Here he is.
I heard that.
Better late than never.
Oh, seconds to spare.
Very good.
Ah.
You're live, Andy.
Well, hello everyone. A very warm welcome from me to this final session, which is looking into the role of insurance in accelerating and scaling the energy transition. My name is Andy Cox. I'm the head of energy transition here at Howden, where I've been for the last year. I'm not actually from the insurance industry, though. I joined after a long career in the energy sector at KPMG, where I was a senior partner there. I spent a lot of my time particularly in the low carbon space, but and from a functional perspective, I was very focused on deals, M&A, transaction services and the like. But the good news is I'm joined by 2 veterans from the industry, if I may describe you as that. First, we've got Julian Richardson from Munich Re, where he's Chief Underwriting Officer at one of their direct insurance arms called Green Solutions. And then we've also got Toby Burnham from AXA Climate, where he's head of London market and public-private partnership. So welcome to you both. Before we launch into the discussion, I thought it'd be worthwhile just spending a couple of minutes just setting a bit of context here for what we're really talking about when we talk about the energy transition. I mean, essentially, this is all about shifting to a completely new energy system for the world. There's big numbers of capital spend mentioned out there, whether it's 150 trillion or 200 trillion even, I've heard mentioned, up to 2050. That's the sort of level of capital spend that people are talking about. And if you think about it, we've not had anything like this since the Industrial Revolution all those years ago. And by the way, that took about 80 years. We're thinking we're going to do this in, I think, less than 30 now anyway, 20 odd years, 27 years. So that's the sort of scale of the, if you like, the opportunity as much as the challenge, and the opportunity for the insurance sector to play a role, because ultimately, all forms of capital are going to be required to make this happen. And as we'll come on to, there's really a strong place for insurance, well beyond the traditional areas of protection, which most people think about when they think about insurance. But just as the world's changing in terms of weather events, impacting countries, businesses and communities, where we've got investing and scaling into low carbon tech and changing business models, so's the insurance world's going to change as well, I believe, along with it, and become a real enabler in this space. So just getting into the kind of discussion then, and just I've got perhaps start with a broad kind of question for each of you. But just from where you sit, what are the specific parts of the energy transition, if you like, in the broadest sense, where you see insurance playing a role? And we'll get into detail as we get through. But just from a broad sense, where, and maybe we start with you, Julian, where do you see insurance really playing a role?
Well, hi, everybody. Hi, Andy. Our day job and what we do very well already is providing those very standard coverages and solutions for all the renewable energy, clean energy, and alternative energy sources. And that's sort of very much in the day job. Every wind farm, every solar park needs a construction and an operational policy to be put in place, and that's fairly standard and understood by financiers, the lenders, and equity providers. Where we're also looking at within Munich Re, we have our Green Tech Solutions team, which I'm really impressed with because this existed before I joined the company, and they are providing long-dated technology risk solutions. This is essentially performance and product guarantees and warranties. As we know, all that capital you're talking about, Andy, is going to be invested in, quite often new tech or emerging technology or technology that's been scaled up. And one of the challenges for all technologies to reach scale is crossing that valley of death from, the difficult, proven in the lab, proven maybe out in the field at a small scale, but to be able to deploy that and finance that at scale and at speed, there is still significant technology risk associated with it. I've been working in this sector long enough to remember when the solar market was really struggling to take off because people were not confident of the technology performance. They were trying to raise 10, 15, 20-year paper to finance these projects. And the debt providers were just, how do we know that this is still going to work in that time? So we, within Munich Re and our Green Tech Solutions team, have a series of these technology solutions that provide, in the case of solar, we can provide up to 30-year paper. In the case of battery and energy storage, we're providing between 10 and 15-year paper. And this is a really good example of other things that we can do to support the energy transition. More broadly, we've also got to think about technology-specific solutions. So we've done a lot of work in my prior company, which now, we're all as individuals part of Munich Re, looking at things like the geothermal sector. Geothermal is, it's low cost, it's low carbon, and it's baseload energy. And these are it's almost the holy trinity of an energy source. But if it's so good, why is there so little of it? And we recognized that there was a particular point in the project development path that was difficult to finance because of the resource development and proving the resource was there. When we broke that down, we recognized actually there was a role for insurance in there to change the risk profile, to put a floor on the downside and create a new insurance product to take some of that risk. So there's two good examples of how insurance can come in and assume risks that debt and equity providers wouldn't normally take or can't take because of their mandate. Very good. And that's a great kind of overview there, Julian. I want to bring Toby in, get your perspective as well from a broad sense. And I'm going to
encourage you to introduce yourself, perhaps say a bit more than I have about yourself, Toby, but I'm also going to let everyone know that you're very kindly dialing in from your holiday. So thanks again for joining.
Absolute pleasure. So you've heard from a number of people from AXA today, which shows sort of AXA's commitment to this space. So I work for an AXA entity called AXA Climate. And AXA Climate is focused on looking towards sort of the transition towards a net zero, but also sort of past that. And we're looking to do this sort of in three ways. One is the training to understand individuals, people can actually understand what they can do and how they can move to reduce almost their own transition risk. Consulting to show what that sort of transition risk is, and then ultimately the support with climate and weather insurance to sort of to back that up. My background is many years in parametric weather and nat cat insurance, which has always been linked to the renewable energy space, primarily because renewable energy is affected mainly by the weather. And when we talk about decarbonisation, I move away from nuclear to the areas that we specialise in, which, as Julian has said, is areas like obviously wind, solar, on that side of it. So very much focused on how we can support those areas. And then you have the two areas of where we look at, where you're actually, as you were mentioning, financing or building this infrastructure, where you can often be affected by catastrophic or cat risks. For example, tropical cyclones or earthquakes or hail can destroy things as they're getting built. And then the long-term operational risk you have as well, whether it's both catastrophic or also things like, obviously too little sun or too little wind, to try and think about ways that we can de-risk that side of it. And the other piece is the transmission infrastructure, which is linked to that as well. So, I'm here in the Canary Islands where it's very hot. So you can have a lot of solar plants and they can provide energy just here. But how do you transport that over to the UK where it's not hot all the time as well? So it's that side of it which links together. So we're trying to sort of holistically connect all three of those pieces together.
Very good. Very good. And perhaps, Julian, could you talk a bit more about specific parts of the market in terms of technologies? I mean, you touched on one or two there. You touched on solar. In the past, you've been involved with geothermal as well. But as you look at it as a house, if you like, where do you see, certainly in the immediate and maybe there's the long term as well to consider, the really big scaling opportunities for this sector to really get behind?
Well, look, at COP28, one of the good things that came out of it, and it was a little bit of an underwhelming COP, but there was this commitment to treble investment into renewable energies. Now, it's taken us 20 years to get to where we are today at about $1.2 trillion of investment into transition assets. And we've just reached that crossover point where investments into renewables is actually just exceeding or matching investment into fossil fuels. And to accelerate that threefold in less than 10 years is really ambitious. So we've got to ensure that we have the right tools and competencies to underwrite those risks, even just from property and casualty. We know that severe convective storms have been a real challenge for underwriting profitability in the renewable sector. We've got a lot of projects being built in locations where we have no data because there was no assets there. So think of solar plants and wind farms, particularly out in places like Texas. We don't have good models on some of these non-peak perils. So we've got to develop that. We've got to ensure, and we've got to be able to share that information with clients and send those risk signals back to clients. Because if you're not thinking like an underwriter, you'll think, oh well, there's a nice big space of open sunny land, so let's put our solar plant there. But at the end of the day, if you're going to get a tornado coming through once every 2 or 3 years and pulling it all up, that's not very helpful, and no one wants to see that, even if you can get it insured, because it'll only happen once. We've got to ensure there's sufficient underwriting capacity. Personally, I'm less concerned about that. I'm pretty confident we will be as an industry if we can demonstrate, across the cycle, across the portfolio profitability, then there will be plenty of underwriting capacity and capital there. Then it is also about
just to interrupt you there on the capacity point. Then, so just as you sit here today, though, would you agree that just looking at big numbers and some of the ridiculous numbers that I've just thrown out, as we sit here today, is that capacity not in the market, but you see it coming into the market when it's needed in due course, when projects start to actually be formed? Is that what you're saying?
For traditional risks, I actually think we have an oversupply of capacity. That's been demonstrated by, apart from the last couple of years, there's been a long-term challenge in underwriting profitably renewable energy projects. And you could almost say the insurance industry has subsidized the renewables sector. And, a lot of people are, they in our industry, they are keen to support the transition, support sustainable investments, and the easiest thing for them to do is go, well, okay, well, we understand property and construction of the oil and gas industry. Surely we can do it for wind farms and solar plants. Well, it's not quite as simple as that, and so they have transitioned to it, but without necessarily the right and detailed understanding of the difference between those types of asset classes. And that is also, sort of segues onto the next point I was going to make. It is about getting that depth of expertise and understanding. With Toby and I, we talked about wind and solar, and those are well understood generally. But there are other sectors such as biofuels, biomass, and geothermal as well. And I think as an industry, we've got to get better at having that R&D facility and being able to really be willing to commit to really understanding some of these technologies, the financing structures that are needed for them, and contribute constructively. This is, again, we've done this with our green tech solutions. When you're writing an annual policy for property damage, if you get the pricing wrong in year one, you can adjust it in year two. Probably you're not going to lose too much sleep or your job over that. But if you're writing, putting out a 30-year commitment, you don't get to adjust your pricing over in year two. You're on the hook for that period. And this is something I'm very impressed with within Munich Re, is their commitment to really deep understanding of the risks and the technologies involved.
Understood. And Toby, as you reflect on some of the things Julian's saying there, and this point about capabilities is interesting. Are you seeing both within AXA, but also maybe more broadly in the market, Julian's identified the need for those capabilities to come into the industry and into the market. Are you seeing that starting to happen in your own organization and wider?
So I think the challenge is, of course, is a lot of these technologies are very new and haven't been done before. And as Julian alluded to, there is very little history on one side, and on the other side is weather risk is constantly changing due to climate change. And again, it becomes more challenging to assess that. So you have those two challenges. You have the sort of the lack of pricing data to understand the risk, and then the lack of understanding of what the risk even is, because the technology is changing so fast. Big entities like Munich Re, I think, have that, but the smaller insurers don't. I think the insurers on the ground who are locally trying to insure these projects don't have that at all, which is why they have to start looking up towards the London market, or towards reinsurers, or towards bigger global entities such as AXA, I think, to help support them on that journey. We talked about sort of solar panels in Texas, where we know in Texas there is a lack of capacity for hail, but solar panels need that, otherwise the constructions can't actually happen. So we have that sort of balance on that side of it, and that's where big organisations such as AXA or Munich Re or others really need to step in, because they have the infrastructure, they have the large scale, and they can provide that support, whether it's via consulting or via training. or via sort of evaluating the models that are out there in the industry to give the smaller insurers on the ground the more confidence and trust to actually cover those risks.
Yeah. And sorry, just a message for the audience. We've got a couple of polls running, so just like to encourage you to, as you listen to this conversation, both complete the polls if you could, but also as questions arise as well. I'd like to take some questions at the end, assuming we've got time, which we will make time for. So if you just put those straight into the chat, we should be able to see them, and we'll come to them in due course. So can I just talk about innovation then a little bit? Let's kind of cover that topic, and we have kind of alluded to a bit of it now. I mean, if I look at, again, I'm coming at the insurance industry after only been working inside it for a year, so I'm a real outsider here. So I'm looking at it slightly differently, perhaps to some. But you know, I've never seen the insurance industry as particularly innovative. And you're going to tell me off now, gentlemen, I'm sure. And very traditional and quite slow moving. And these are massive generalizations, I accept that. But do you see an appetite now, though, to really kind of change that mindset as an industry and start to innovate? Because, as you've both said, there are new technologies coming out requiring some fresh thinking. Is the industry really ready for this and wanting to get, you know, ready to get behind it?
Sorry,
Toby. Go on,
if
Toby.
I come in there on that. I agree with you. I think the insurance industry, by its nature, is it doesn't. They say they're innovative, but ultimately it's a risk-averse organization, and they focus on things that happened in the past. And when you try and look at new risks, it becomes quite challenging. But the insurance industry does have the expertise and the knowledge and the people to innovate, to do that when there is a need. So, for example, AXA Climate is an entity of AXA which is purely focused on innovation in climate risk because it's never happened. It's new, so you have to have sort of a different group of people who are looking at things in a different way, and other organizations are doing the same. The other side of it is the insurtech industry is growing all the time. And there are many small insurtechs who are coming up and trying to come up with new solutions and new ideas, again, to sort of prompt the behemoth of the insurance world. So there's two sides of it. One is there's a lot of innovation within insurance companies. There's a lot of innovation outside, and insurance companies can be slow to follow that. But when they do, you know, when the oil tanker does move, then it moves considerably, and you get a huge impetus behind it. So that's how I would see the sort of the view as a whole on that.
What's your perspective, Julian?
Yeah, I have a slightly different view. You know, Toby mentioned earlier the lack of data. You know, I think we in the industry, and I've been in the industry long enough to remember when an underwriter was very good at taking a view, right? And we can become slightly over-reliant on, you know, pricing everything to sort of 5 decimal points, and you're really looking at spurious inaccuracies. And I think we need to get back to you know, blending that art and science. Yes, we do want to use data and use it well, and that informs our decisions. But we also need to get better at sort of collaborating with our clients and sharing in the risk and communicating back to them what the art of the possible is. You know, when clients come to us, and I've experienced this many times over the years of wanting an insurance solution, really what they're asking for is the insurance industry to take all the risk, but not to take all the return. And that doesn't really work. You know, we've got capital that is a lot of capital that's available at a very economic rate, and we're willing to put that behind certain things. But we've got to sort of have that relationship with the client and have that willing and informed buyer. Now, where I've seen challenges in the industry is we have some structural barriers to innovation. You know, innovation is difficult because if you do get it wrong, it can be extremely expensive in our industry. But where I think, again, this is again that industry collaboration and client collaboration and working with the brokers are playing a really important role in our market, okay? But they're not set up for innovation. You know, they're set up for someone to turn up at and say, look, this is what I bought last year. Can you renew it? And they'll go, okay, yeah, I know 20 people that write it. I probably know roughly what you paid for it last year. Yeah, I'll do that on a success only basis, which is great. And that's the business model of brokers. But when we're talking about innovation, the question is more like, well, I don't really know what the risk is. I don't know if anyone sells it, and I don't know what price they'd sell it at. And by the way, if you solve all those problems, I don't know if I'd buy it anyway. That just does not suit the broker's model. So often people end up coming to the bigger entities like Munich and AXA and so on. The problem there is, again, without the broker involved, you're losing two really important things that the broker brings to our business, right? Yes, at Munich, we can come up with a Munich Re solution, but that's often what we want to sell, and isn't always what the client wants. And that, it's the broker's job to bring these two parties closer together. So that constructive commercial tension the broker creates, now I shouldn't be saying this as an underwriter, of course, it is valuable for innovation, and brokers need to be part of that. And even as Munich Re, the largest insurance reinsurance company globally, there's only so much capital we can take a view with. So if we don't have all that data, if we don't have utter confidence, we will only take a small proportion of it. And so their broker, therefore, needs to be there to syndicate. And if they're not in that conversation, that syndication service the broker brings doesn't happen. I said there was two. There's three things that the broker also does. The challenge with innovation is and I've seen this happen numerous times, is that we can and do spend a lot of time doing that innovation and doing that intellectual research and sweating through it. And then you only ever sell one policy, which doesn't work for anyone. It doesn't work from a portfolio building point of view. It doesn't work from an economics point of view, and so on. So the broker's third important role is to not turn up with one risk. It's to aggregate, right, we want you to innovate because we've got 50 clients or 100 clients or even 20 clients that say this would be useful, and then it's worth us doing the innovation. So those three things, creating the competitive tension to bring what we would perfectly want to sell closer to what the client actually wants, that syndication, and that distribution or aggregation of demand, so that we know that it's not going to be a one-off transaction.
Yeah, and it's really interesting hearing that, sitting here, and I'm going to plug my own shop momentarily, but we've invested an awful lot in what I would call R&D in this space. I think we've got something like 60 people in climate risk and resilience now, which is very much about focused on driving out new products. People would have seen the CCS product that we've brought to market recently as an example. But yeah, it's quite interesting because I've just assumed that all the brokers are doing what we're doing here, but from what I'm hearing, that's not necessarily the case, which from my personal point of view is interesting. Yeah. One of the things I wanted to ask you both, one of the points I've heard said several times is that everyone wants to be the first, second mover. No one wants to lead. So, and I don't know whether that's a historic thing in the industry or not, but but we're in this world of higher risk capital, really needed to move the needle, where we're not going to have all the data. How are you kind of seeing the market evolve around that? Are people in the industry starting to realize we're not going to play that role as first, second mover, and actually, you know what, we're going to be brave and lead here? How's the sort of mindset around this at the moment?
Well, I can talk very positively about that, because when I joined Munich Re last year, it was very explicitly within my mandate and my responsibility. You know, we as Munich Re want to be the green beacon for the industry, and we're not looking to dominate any one particular sector. We want to bring our peers along with us. And that means both underwriting community and the brokerage community. And we're recognizing that as, you know, the behemoth of the industry, we have a role and responsibility to do that. And we think it's in our industry, you know, our interest to be that leader. And, you know, it is obviously we've got to work within the confines of antitrust laws and so on. But we do want to bring the industry with us. And we think we've got a vision as to how the industry can respond. And we're sharing that vision as broadly as we can and looking to, you know, take on that leadership role.
And I think just as to Julian, I think it's all about where the capital ultimately comes from and where it supports it. So when a global reinsurer steps up, helps the insurers underneath. The same when you have a global primary insurer who's willing to lead as well, because I think, as you say, then others will follow on that piece. The other piece of the puzzle is the ILS guys, the capital at the top of the tree, whether that has to start thinking about looking at those, whether it's supporting those kind of risks as well. So you're getting a real big capital push from the capital markets to start backing these kind of risks. And I think you're seeing that slowly starting to happen on a sort of on a piece by piece basis, which is great. But you know, the fact that you have major insurers, major reinsurers, all part of this day shows that we are willing to lead and push that. And I hope that means that the other ones who aren't taking that leadership position will follow, or will start realizing that maybe they should be the leaders as well, and everyone moves forward on that side of it. But as Julian alluded to, and I think it's not just the insurers or the reinsurers, it's not just the capital, it is the sales piece, because we provide the risk, but someone has to be out there talking to clients, selling. The intermediaries become very important as well. So obviously Howden has stepped up, and some of the other ones as well, which I think is really going to where everything is going to move, because we as an insurer or reinsurer, we don't really often talk directly to clients. We only hear one side of the story. And I think it's the intermediary side, as Julian was alluding to, where they have a real power to actually be the first movers and bring everyone to the table on that side.
Yeah, and one of the observations I'd make, again, new to the industry, but it really struck me, is the level within organizations that the conversation's happening. So, you know, very traditionally, obviously, the conversation is very much with the risk manager in the retail client. And I understand that, and that's a very important relationship that exists. But if you just think about, go back to where we started with the enormity of capital that needs reallocating by these businesses. These are strategic decisions that organizations are having to make. You know, if you went to BP right now and talked to them about CCS and ask Kate Thompson to explain how they're thinking about capital allocation and over the next, 10 years in terms of, say, CCS, where are you looking to place your investments, and get into that sort of conversation, which clearly, as we've said, insurance can play a role. I've been surprised that the industry isn't necessarily having that. I don't think having that conversation at that level. It seems to be remaining just at the, as I say, I'm very clear it's an important conversation at the risk manager level, but I can't help feeling that the industry needs to be, also has a place at the table in the more strategic dialogue that needs to happen. I don't know if that's just a personal view or if you share that or disagree.
Capital allocation is a really tricky question, isn't it? And you've got to allocate your capital where you think you're going to get your best return, but that is, there's a temporal element to that. It's not, what your best return you get for today, it might not set you up for your 10-year return. And it is about placing, having a number of small bets and increasing those as they mature and develop over time. But we have one of the really useful things the Paris Agreement did was to create this bottom-up what they call the nationally determined contributions. So each country now publishes what it's, these are aspirational, of course, but they are publishing data that says, this is what I'm going to do to try and contribute to that limiting climate change and global warming to 2 degrees and 1.5 degrees. And that actually provides us with a roadmap of where the capital allocation could be. So I think there are tools out there are proxies out there that can give us an indication of what's going to happen. And being aware of that policy environment is similarly important.
I would add, it's almost like a training thing across organizations as well. So they all sort of understand their sustainability targets, what they need to do, how that operates as well. So it's sustainability and risk all almost come together as you try and get to zero carbon. Again, which is why we see this idea of training, of consulting, of not just taking the risk, but also explaining to organizations what risks they have, how they can change the risk, how they should look at things maybe a little bit differently, rather than just, as Julian says, try and transfer all that risk over to the insurer, where they can say maybe some bits they can sustain themselves, maybe they can be a bit more resilient, maybe they can invest in different ways. I think it's this conversation between the different parties. But as you say, Andy, it is often just the chief risk officer that we get to talk to. But we need to move away. I agree with you. We need to move away from that and start talking to sort of other members of the senior leadership team of companies as we move forward.
Yeah, just want to share with everyone we have the results of one of the polls here. I just read it out to people. I'm not sure people can see it on their screen, so I'll just read it out in case. Where do you see the biggest opportunity in the energy transition? And it's quite interesting. 50% have said renewables, and by that I'm assuming people are directly thinking about wind and solar, so the more mature, if you like, technologies. Then 25% emerging technologies, 13% green adaptation, so homes and cities and so on. Interestingly, 0% in carbon markets, which I find very interesting. I understand there was a session before this on the carbon markets. I was going to ask you both a question on that in a bit, but the reason why I find that interesting is because where the real spend is right now in the industry, it's kind of mirrors what's here. The bulk of it is in the in the wind and solar space, particularly. Emerging technologies, we're starting to see more noise come out as the business models emerge around carbon capture and storage, for example, hydrogen. The adaptation of homes and the efficiency side of smart homes and all the rest of it is some way off, and it sort of mirrors these results. But I do find it interesting, 0% in carbon markets. I don't know if you've got any views around that.
I completely agree with that, actually. Okay. Just for disclosure, I wrote my master's thesis on carbon trading risk in 2000, 23 years ago. And actually, nothing has really changed. Some of the wording has changed from, Kyoto language to Paris language and VCM language, but fundamentally the risks are exactly the same. And what is interesting, we have established a carbon team within Munich Re, so we're looking at this actively as to how we can be part of the solution and build robustness in this really important policy mechanism and capital allocation mechanism, which is what carbon markets are. But we need to help build the environmental integrity in them. In Carbon Market 1.0, the banks were the institutional capital and the institutional balance sheets that participated in them. With MiFID and the Dodd-Frank Act that look after the 2008 global financial crisis, there was a lot of those banking desks were shut down. The commodity trading desks within the banks were shut down, and so that institutional balance sheet has gone away from environmental commodity markets. In Carbon Market 2.0, which is what I see as things like the California market, that gap was actually taken or filled by the commodity trading houses that were using their own corporate balance sheet to wrap carbon offsets. And again, the banks and the commodity trading houses did it because the insurance industry was too slow to step up and not bold enough. We're now in carbon market 3.0, and the scale of that we need to get the carbon markets to is well beyond the capabilities and the balance sheets of those commodity trading houses. Dodd-Frank's and MiFID still exists, so the banks aren't going to come back in and take that on their balance sheet. And actually, a lot of those risks that are impacting the carbon markets are insurable perils. And so it's incumbent on us almost to come up and be that institutional balance sheet, to provide that professional risk pricing, risk underwriting services to build confidence in these important mechanisms.
I would agree with Julian on that side of it. Is that I was at a conference recently talking to a trader, and he was saying that the only way this market is going to grow is if the reinsurers and insurers step in and step up. And Munich Re, Swiss Re, they have their trading desks, but I think you need more than that to grow. But the challenge, I think, you have a lot of bad press from carbon trading or carbon markets and carbon credits. When you hear that Taylor Swift flew halfway around the world, that's all right because she bought some carbon credits to offset that. There's a sort of a bad view in the popular view of that. And then the other side of it is, can you trust the carbon credits? Is it real? Is it there? Where's it come from? So there's a lot of sort of areas which need to be sort of bulked up before this becomes a viable market. But it is growing and it is bulking up, and there's a lot of entities there and a lot of interest. And I think the insurance and reinsurance support will definitely come, but I think people are a little bit sort of reticent right now to as you said before, to make that first step. Everyone's happy to come in second, but it's that first step of first products, the first customers. Who's purchasing them? Is it the guys producing the growing the trees, or is it the people buying the carbon credits, or is it the people buying the carbon credits off them? Where's the natural customer? Who's paying the premium? It's that kind of area which is still being worked out. But there's a lot of very clever people working on it right now, and I think once that's sort of all sorted out, then it will, as Julian alluded to, the insurers and reinsurers, the risk transfer market will come in a large scale and enable this to grow and to scale. So I think as it's wrong to have this as the last sort of opportunity, because I think it may actually be one of the largest opportunities once these pieces have been put into place.
Well,
the good news is we've actually already done much of that, and that's the role of the insurance market, is to de-risk these things and provide certainty and confidence. And this is what we talk about. About getting a deep understanding of the markets, because I've been working on carbon markets 23 years. We really understand them, and we can get our heads around them. That it's all solvable or solved essentially.
Yeah, and I was going to say, which you kind of said, I think what I was going to say, but isn't the real purpose or a key part of the role of insurance is to build that trust that you talked about, Toby? So yeah, it certainly from my perspective, it feels like a big opportunity, particularly when you talk about a $50 billion, voluntary carbon market down the line. Anyway, can we just come back to something around perhaps in innovation? And just want to get a view from you, Toby, around, because in your past life you were at Global Parametrics. Mm-hmm. It'd just be good. How are you seeing that as a method of insurance, if you like, come to the fore now, and the role it can play here in this whole energy transition space? How are you seeing that evolve?
Well, I guess it harks back to Julian's earlier comment about underwriters used to underwrite like this. As we get more data, as we get more information, it gives people more confidence, I think, because when you have risks which are reasonably unknown, the more science behind it and the more basis gives risk carriers more confidence to back such risks. Because you may not know what the losses are, but you have some kind of idea of the occurrence of the event or when something is going to happen. And there is some science backing it, which again gives investors a willingness to sort of to move forward. So I think that's one of the key elements of a parametric product, which pays off when an event occurs rather than big loss adjustments and stuff. Because if you've never had a whole lot of solar plants in Texas before, You have no idea what the loss of a hailstorm is going to be, but you do know that you have some kind of idea of when a hailstorm is going to occur or when it has occurred on that piece. So you can have more confidence. As you get more confidence, and as the underwriters get more confident in that, then there can be more sort of the art of underwriting can come in, and they can start being more sort of not relaxed on the pricing, but more relaxed on the risks that they're willing to take. But at the beginning, I think you need to have that underlying data, an underlying view to move forward.
Very good. Just on data then, or the lack of it, as we move into some of these emerging technologies, clearly don't have the years and years of claims data to rely on and project forward from. What is the industry doing, or what does it need to do to get comfortable? And we've probably touched on some of the answers to this, I guess, in the conversation. But, you know, in this world of a lack of data where insurance lives off lots and lots of analysis and analytics, what are the, if you like, the new ways that people are looking at the issue and trying to get around, solve for these problems and get comfortable with the risk in other ways? Or what are people doing about it?
Well, you know, when we look at things like carbon markets, people say, oh, there's no data, or they've only been around a few years. But again, that's simply not true. There is an enormous amount of data out there, and they are enormously transparent markets. And you've got to really think about what is the data you're concerned about. Are you concerned about the occurrence of a carbon offset been invalidated, or are you actually concerned about a fraud or negligence peril for which we have lots on? It just hasn't been applied to carbon markets. So, you know, there requires some I don't like to use the word creativity, but there is some, you know, using proxies and taking a view and combining it with the science of underwriting and that art is something that we can do.
Yeah, I think I agree with that. As you say, there are risks which are adjacent risks which maybe apply to something else that we don't think we separate the two, when actually it is just we are talking about some kind of asset, and we are talking about different things that can happen to it, and things on that side of it. So I agree. The other one is small innovation, is whether you have small pilots, people to try something out. It's to bring in some investors who are willing to take bigger risks, whether it's the ILS world or the asset managers. So there are different entities you can look at things differently. And then as Julian alluded to, you know, relying on the massive balance sheets of the Munich Re's, of the AXAs, of these big organizations to say, right, we can take a view, and we can go and try and do something and see what happens on that piece. And I think there's all these different elements which will link together. There's not one silver bullet which will sort of solve this, but it does take sort of, I guess, going back to it, innovative thinking about how we can support such stuff.
Yeah, and let's just I'm going to move to audience questions in a minute. There's been a few come up, but I'd just like to get your perspective on collaboration. So I think both of you used that word, but if I was in my old life and sat amongst a bunch of energy sector executives, it's only been in the last few years that they've really woken up to realize that they need to properly collaborate with people, organizations that they've perhaps never really collaborated with in the past. And that itself throws up its own challenges. When you think about this, the insurance world and the sort of solutions that need to be developed, and some of the challenges with that, and the lack of data we touched on or not, depending on your point of view, and that side of things, how do you see the important collaborations that need to happen that aren't necessarily happening as much as they could be? I mean, I've got my own perspective, which I'll throw in if you don't touch on it. But from your lenses, where do you see that? Perhaps Toby, do you want to take that first?
So I think there's two elements to it. There's the insurance industry side, which is based off collaboration because risks are shared and transferred. I think that piece there's a lot of collaboration going on. Some organizations more than others. But I think the key collaboration, in my view, is with the policymakers and governments. about how the sort of the incentives that they can put towards these kind of programs, whether it's reduction in taxes or different plays that they can do on the policy side, which would really move it in my view.
Julian.
Yeah, I have a yeah. I sort of agree with Toby on that. I mean, I did spend a couple of years as an advisor to the UK government, and in fact, I was an advisor on the creation of Global Parametric, Toby's former company. But I think more importantly, it's about the client voice. One of the challenges is, as the underwriter, you are an intermediated entity. And the broker's priority is to get the deal done at the cheapest price, whatever. And actually, that isn't always the best for long-term innovation and development. So, having that sort of not just three-way conversation, but a four-way conversation with the broker, the client, and of course the financier, because they're the ones that are often driving, the risk allocation. Insurance is part of the capital stack, right? And we're a key enabler of it. And it's because we take risks that the debt and equity capital providers can't or won't take. So we have to be able to send signals back to the clients and the financiers as to what is the art of the possible and what will lead to long-term low cost of capital for everyone to get these things rolled out. So that's a key collaborative dynamic that we need to have, and that means we've got to listen closely to the client's voice. And we need to be able to send those signals about risk appetite and risk pricing back to the clients. And I think that's where we as an industry can do better in terms of data sharing and sharing insights. Between us, these are all very much solvable problems. And I'm confident the insurance industry has got a big role to play in it.
Yeah, no, I absolutely agree. And the point you've made there around collaboration with the lenders, for me, that's something that we're focusing on here a lot, spending a lot of time at the moment with some of the key, some of the big high street banks actually, but also the commercial banks, but also the project finance lenders as well. And it's always surprised me that there isn't that close, hasn't been necessarily that close relationship and sharing of information, sharing of views on risk that you would imagine ought to be happening. Particularly go back to your original comment, Julian, about the Valley of Death and how you bridge that and bring banks into lending earlier, perhaps in situations where they don't feel comfortable with the tech or there's a scaling risk, neither of which they like, and how insurance can kind of plug that. I just feel there's a solution there to be fixed, and and it would make, I think, huge difference, particularly in the clean tech space. But okay, very good.
I think that part of that conversation, Andy, is about where we see it most valuable is where you have those long-term relationship with clients. Those clients that an insurer needs to stick with its client if it has a loss, and the client needs to stick with the insurer if it has a loss or whatever. And that creates long-term trust and relationship and good communication, and then you can start building those partnerships where and it's quite easy to identify those clients that have those longer term views.
Very good. Right, I have got a 3-minute warning which I haven't spotted on the
Came in 2 minutes ago, Andy.
I was enjoying the conversation too much. So we're probably almost out of time. I'd love to take one question on this list. What role do the panelists see risk sharing, syndication playing in overcoming challenges around emerging risks, new tech, limited data, etc.?
Yeah, I think that's a great question, actually.
Yeah.
And that's about how we get to take a view, and it's about dipping our toe in the water, and those are the syndication services that I said the broker should be present for. And we have particularly in London, where you've got hundreds of underwriters within stone throwing distance of each other, that you can go around and build up the slip, a couple of percentage points at a time. It's not about getting 25 percentage lines from 4 players. It requires, okay, look, this is difficult where there is some uncertainty. We haven't been able to price it to 5 decimal points. Let's take a view, dip our toe in the water and spread the risk. And that includes vertically as well, up through the reinsurers and as Toby mentioned, the capital market vehicles as well.
Yeah, I agree. I think if everyone gets the same view of the risk, it enables that pool to grow and put the capital in that's actually needed to support this, so that everyone understands the risk, everything is transparent. And that only works by this idea of syndication and sharing.
Brilliant. Well, look, all that remains then is for me to thank you both for participating in this. Hopefully people got a lot out of that, and thanks for being so open with your views. And I've certainly learning a lot as I continue to learn a lot in this industry. So, but great to moderate this discussion.
Thank you.
Thank you all 3 of you. Thanks, Andy, for moderating so well. I think that was a fascinating conversation and a really great way to end the event, actually, because there's just such a huge opportunity there if we can get it right. So thank you all. And that does bring the event to a close. Thanks, everyone, for attending. Thanks again to our speakers over the last couple of days, to our sponsors, AXA, Waitmans, Moody's Analytics, and Oliver Wyman. All the content from the sessions will be available on demand. Some of it already is from yesterday, and today's sessions will go on this evening. You may have seen there's also content from our last 2 smaller events on demand, so Nature, Risks and Opportunities, and Resilience and Adaptation. So there's loads of great content to chew over. I think about 14 hours in total, so best of luck with that. But it is available until the 30th of April. Hopefully everyone took some action points from these 2 days. And I think my main message really is that now is the time for action. It's time to start making a tangible impact wherever we can. So moving from emissions measurement to engaging with clients and suppliers and actually reducing those emissions, or bringing resilience into the claims process and the underwriting process. Addressing UN SDGs in a more quantifiable way, which links to something Sean Tarbuck mentioned about a new calculator that's being developed by ICMIF and Swiss Re. So there's lots to get on with, and hopefully you all found that useful over the last couple of days, but we are out of time. Thank you very much again for attending. We will be running more events through the year from the summer and into the autumn, so we'll keep you posted on that. For those of you who are based in the UK, we're also launching an in-person mentor networking event initiative, which will be a series of meetups where you get to sit down with some of the market leaders on sustainability, and hopefully you will find that really, really useful. So we will keep you in the loop of everything. Thanks again and see you soon.